Tuesday, July 30th, 2019, Maneco 64, home of alternative economics and contrarian views. This morning I want to touch upon the debt ceiling in the US again. I'd like to thank James Sturck for noting something very interesting yesterday on King World News about the debt ceiling. And it's even worse than I thought originally, and I think it's even worse than most people think. Also, I like to look at the British pound. It's continuing to melt down. What would the solution be for stabilizing the British pound or sterling, the currency? Of course, it would be raising interest rates. But the Bank of England, of course, is asleep at the switch. Or they're not really asleep. It's on purpose. They're using Brexit as an excuse, basically to devalue the currency, to impose financial repression as well on investors in the UK. They've manipulated the bond market, interest rates in the UK. Gilt interest rates are actually dropping. You would expect during a currency crisis that we're having, interest rates would have to rise to protect the currency, but that strategy doesn't exist anymore. Central banks nowadays, Bank of England included, the only weapon they seem to use is to create more and more money. They don't know how to withdraw the punch bowl, as William Martin once said, former chair of the Federal Reserve. So yeah, let's look at the markets first before I go into the debt ceiling story. Have a look at the pound, how it's doing against gold as well, and UK gilt, the interest rate there. So it's 7:38 a.m. Right now we've got spot gold at 14.26. So it's down just under $1. Range has been 14.22 to 14.27.50. So pretty narrow range overnight. We've got silver at 16.45. That's unchanged. 16.40 to 16.49 range overnight. So pretty quiet too, range compared to the previous few weeks. The Dow future is up 13 points, 27,231. S&P 500 up 2.25 at 3,022. The NASDAQ 100 futures at 79.91, up just over 3 points. So sterling this morning is down another 0.2%. We're at 121.48. The low overnight has been 121.17. I'll quickly show you a chart of sterling or GBP USD, and you see here that yeah, we've broken key support, very key support, just below 125. And now it looks like we could go retest the low from October 2016, which was around 118. I don't expect, of course, the pound to go straight down to that level, even though it looks like it is doing that now. But markets tend to not go up or down in a straight line. But you can see here the overall picture. It looks like massive head and shoulders all over the place. Doesn't look very good. Below 117 or 118, what is the key level there? Well, it's the low from the early 80s at 105. So yeah, in the early 80s, don't remember exactly the year, 1 pound dropped to $1.05. Some people have asked, why is the pound worth more if the dollar is the reserve currency? Well, it's all about relative value. The reason the pound exchange rate is higher than the dollar is because when there was a gold standard, 1 pound was roughly a quarter of an ounce of gold, and 1 ounce of gold was $20.67. That's how the exchange rate was devised. One pound was about $4.87. And that's the only reason why. It doesn't mean that the pound is worth more. It's all about relative value. So ever since the UK has been off the gold standard, that exchange rate has dropped from 487 all the way to 121.50 right now. So the euro this morning is slightly lower, not that much. So 1 euro is fetching $1.1136. So you see the euro, 1 euro is worth more than $1. The dollar is worth more than 1 yen. This morning, the dollar is down 0.2% against the yen at 108.57. Against the Chinese yuan, the same thing. The dollar, $1 buys 6 yuan, 88.90. So that's down as well slightly. WTI crude is up almost 0.75%. Is at 57.26, up 40. Brent crude is up 42 cents or 2/3% at $64. 10-year yield is around 206 this morning. The 3-month is at 210. So inverted by 4 basis points. Of course, tomorrow is the big day. The Fed is expected to cut. Some people even think they might surprise with a 50 basis point cut. I think they're going to go for 25. What about UK yields? It's really crazy because you would expect a country whose currency is melting down like the UK, that interest rates here would be a lot higher, that the government would have to, how can I say, pay a lot more to borrow. But no, we've got the 10-year gilt yield at less than 1%. It's at 0.65 basis points, and it dropped yesterday. People were buying gilts even though the currency was melting down. So I'm going to stick with precious metals, and I'll show you a chart here of XAU GBP. It's actually from gold.org, which is, I think, a website for World Gold Council, and it's a really good tool here. It gives you the price of gold and sterling all the way back to the early 70s, and this is a monthly, on a monthly basis, this chart. And if you go back to 2011, the highest monthly close was 1,124, and right now, just before the end of the month tomorrow, we are at 1,173.50. So that chart there is showing you a breakout in the price of gold and sterling. What does that mean? Well, that means that things are going to get a lot worse. The pound is going to continue to shrink versus real value. That's going to be more inflation, more rising prices, a lower standard of living. But yeah, everything's going to all the blame is going to be put on Brexit. But it's all about the debt. All the debt that has been created in the last 100 years since World War I. And I spoke about that in a video a few days ago. We've gone from 7 billion or even below £1 billion of debt before the start of World War I. We went to 7 billion in 1921, and now we're all over 2 trillion, comfortably over 2 trillion, going towards 3 trillion in debt. That's what it's all about. So inflation, inflation, inflation. And there's a saying by Ernest Hemingway, of all people, the American author. And he said, the first panacea for a mismanaged nation is inflation of the currency. The second is war. Both bring a temporary prosperity. Both bring a permanent ruin. So yeah, the UK is on the road to ruin, unfortunately. And that's why you need to protect yourself, again, with precious metals. Anything but pounds. Anything but pounds. Don't keep a minimum amount of pounds in the bank, in my opinion. It's up to you to decide. Well, what I've been doing for the last, 17 years is trying to accumulate physical gold and silver as much as possible. If you're interested in purchasing gold and silver here in the UK, I have a promo code with Gold Investments, maneco 64. We also seen yesterday the launch of Glint in the United States. It is physical gold, but it's in digital form. They hold your gold outside the banking system in a vault in Switzerland, and they provide you a debit card or MasterCard where you can choose to spend that gold or just keep it there. I've got a promo code there as well. It's Mario Glint 79. What about the U.S. debt ceiling? Yes, thank you, James Sturck. There's an article on King World News, and he said investors missed the most important news that will not only have a huge impact on gold, but also the world. And I have to admit, when I reported on the debt ceiling being raised, I didn't really catch on to the fact that they actually didn't raise the debt ceiling. They suspended it until July of 2021, which means there's no limit to how much Congress can spend up until July 2021. So it's actually worse because there's no limit right now. And this is what Forbes says here. There's an article I found from Forbes. What Congress is doing by suspending the debt ceiling. So it says President Donald Trump and congressional Democrats and Republicans have reached a compromise on a wide-ranging budget deal Monday that would increase federal spending and suspend the debt ceiling for 2 years. That means that the government will be able to borrow enough money to cover its expenses for 2 more years, and that there will be no limit as well. And we're seeing this already coming up in the news. Yesterday, Zero Hedge reported U.S. Treasury now expects to borrow over $800 billion in debt in 2 quarters. It's crazy. It's going to get really worse. They're talking about $1 trillion deficits, which is roughly 4.5% of GDP for the next 2 years. But I think it's going to get even worse. I think this deficit is going to increase. The debt is going to balloon. There's no limit to how much they can spend now for 2 years. As Ernest Hemingway said, war and inflation, they go hand in hand. It's a sign of mismanaged economy. And we can see here that Donald Trump's excuse for doing this, for compromising with Congress to suspend the debt ceiling, was this, and I quote him. This is from an article in the FT. It says, Mr. Trump wrote on Twitter, "This was a real compromise in order to give another big victory to our great military and vets." Again, using the war card, the veterans card there, but it's not a victory, Mr. Trump. Reading this book here, War and Gold, it tells you how one of the greatest military men, generals in the U.S. history, General Eisenhower, some of you might argue with me, but you have to admit he's a big figure. He wasn't only a general, he was president, and when he was president, even him used to raise taxes to have a balanced budget, even though the U.S. was fighting the Korean War. And the U.S. had a lot of commitments overseas after World War II. He ran balanced budgets. So don't tell me it's patriotic to run deficits, because one of the great patriots, Dwight Eisenhower, ran a balanced budget. It's even worse than I thought. The debt ceiling hasn't been raised. The debt ceiling has been completely suspended for 2 years. So watch out. If you enjoyed this video, make sure you hit the like button. Subscribe to the channel if you haven't yet. Please share this video far and wide. And you can also follow me on Twitter, Steemit, and on DTube. I wish you all a great day. Take care. Bye.